Hello traders and welcome to another video review. Today is Friday, September 1st, 2023. Now let's find out what's going on today on the Forex economic calendar. Because it is the first Friday of the month, of course the non-farm payrolls data from the US are scheduled for release as usual. This data are scheduled for release at 2:30 together with the unemployment rate. The non-farm payrolls are expected to drop from 187,000 to 170,000 and the unemployment rate is expected to stay in line at the level of 3.5%. Moreover, average hourly earnings are scheduled for release at 2:30 as well. Those are expected to drop from 0.4 to 0.3%. Just before that, we got two other very important data scheduled for release. Germany manufacturing PMI data scheduled for release 5 to 10, and then 10:30 UK manufacturing PMI data. At the end of the day, at 4 o'clock, there is ISM manufacturing PMI data scheduled for release at 4 o'clock, and this is of course the data from the US as well. This time this ISM manufacturing PMI data is expected to increase from 46.4 to 47%. So very busy, very important day for the market participants. Non-farm payrolls, unemployment rate from the US, it's obvious, it's very important event, might cause a big increase in a volatility. So market might be very dynamic and aggressive. So please stay focused during this kind of a data release. Remember, 2:30 average hourly earnings, non-farm payrolls and unemployment rate, all of them are scheduled for release. Now let's just jump to the technical part, and of course, because of the euro dollar, because of the non-farm payrolls, the euro dollar will be now analyzed. So let's just go to the 4-hour chart of the euro dollar. As you can see here, we are bouncing from the lows. The lows were established at the level of 1.0766. So this is our technical support, and it looks like the market wants to move a little bit higher. Nevertheless, this is something that looks like ABC pattern only, right? What I mean is, of course, the movement from the upside. It doesn't actually looks like an impulsive pattern. So what most likely will be happening here is the ABC. It can be ABC or even more complex correction, but it looks for now like this: ABC to the upside, which is done right now, and the market might be heading lower. And of course, this happens, the local high was made at 1.0946. then we have a very steep movement to the downside, and of course we are testing the level of 1.0842. we broke below this level. However, it looks like a pin bearish bullish candle with the low at 1.0829, so it's like a 15 pips below the official, let's say, strong technical support. Momentum wise, we went down from the level of 70, which is of course the level that determines the extremely oversold market conditions on a 4-hour chart, down towards the 44 points. So this is of course the very significant move, because now we are back under the level of 50, which means that we are trading into the negative territory. Bears are in charge of this market for now. The next target for the bears is of course this low of the wave B, 1.0783, and in order to rally higher, we need to break above the wave C high. So that's the outlook for the euro dollar just before the NFP payrolls are scheduled for release. So that's the outlook for the euro dollar. Let's take a look at other pairs that might be important just ahead of the NFP payrolls. I mean USD to the Japanese yen. So let's just find out what is going on here. US dollar to the Japanese yen. Here we go, 4-hour chart. Now, on the US dollar to the Japanese yen, we are still progressing inside of this uptrend, right? So we are going up and down, up and down, up and down. The recent high was made at the level of 147.38. Okay, and we got the big engulfing pattern here. So because there is a big engulfing pattern, we of course from the technical point of view, we needed to go lower. So right now this is the local high. We going lower. We are testing the trend line, sorry, the moving average. Of course we are testing the moving average located roughly around 145.31. The low was made at 145.25, so kind of a breakout to the downside. Nevertheless, it still looks like the market is actually moving lower. The next target then for the bears is 144.55, which is the low from the August 23rd. We are trading between the moving averages, 50 and 100 moving average on the 4-hour time frame chart. The RSI is still negative, roughly around the level of 40 points, so the bearish momentum is pretty solid, and we should expect another movement to the downside to be made very, very soon. The intraday technical resistance is 145.74. The other market that might be moving very, very high, that might react violently on the data release, is of course the gold market. So what do we have here? The gold is trying to move higher, and very nice sequence of higher highs, higher low is being made right now. The recent high, the local high, the recent high, swing high, was made at 1,948. That's the recent high. This high was made, of course, during the extremely overbought market conditions. There is clear and visible for everyone bearish divergence between the last high and the other one, the newest one, basically. So this is the bearish divergence. The price action is to the upside. Nevertheless, the momentum doesn't actually goes that high at all. It moves basically you know, very, very yeah, it's almost flat. So it looks like we have a bearish divergence. What are the targets for the bears? Well, the first one is of course located, let me just take the other line here. The first one is located roughly around the level of 1,934, but the key technical support for gold is somewhere around 1,920 to 1,925, I guess. Yeah, 25. So this is the zone here. It's being supported by the 100 periods moving average, so any violation of the zone opens the road even towards the swing low from the August 21st, located at 1,884. So please keep an eye on the gold. And the last market we are going to talk about is the SP 500. So we can take a look what kind of a retracement this market done during the movement to the upside. Of course, we need to switch it the correct way. So that's the situation with the Fibonacci's. Why we're talking about the Fibonacci's? Because this is the directional movement here, and this movement to the upside looks like a big ABC. It looks like the big ABC, and what I mean is this. So free wave market movement to the upside. The Fibonacci levels doesn't actually works very well because market is breaking them. For example, 61%, which was located here, was violated very, very swiftly, and technical resistance I was trying to find maybe somewhere around this this level. It was tested here, and then it was tested here, then there was a small breakout, then this level was tested again, so a big thick red line right now on the chart, and it looks like it works somehow for the top of the wave 3 that was made during the extremely overbought market conditions. So all of these markets right now are ready for the down move basically. SP 500, gold, and the euro dollar, and even the US dollar to the Japanese yen. So the outlook remains bearish, and only in the situation that NFP will completely surprise the market participants, the outcome might be of course completely different. But if the market will behave technically and data will be in line with the expectations, the market will come back to the technical mode, and all of these scenarios might be followed by the market. So please stay focused, stay vigilant. Today NFP payrolls release 2:30. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.